There's this one trading strategy that I use every single day. It's stupid simple, incredibly reliable, and it's the reason why I'm able to make consistent profits in the markets. The strategy what I'm about to teach you is so simple that even a complete beginner couldn't mess this up. And unlike all these fake gurus online who just teach and yap, I'm gonna now first take a trade live in the markets with the strategy to prove that the strategy works every single day. Then I'm gonna show you the full strategy along with 3 simple steps on exactly how you can execute this strategy. So with that being said, let's not waste any time. Let's get straight into the video. All right, I just sold the markets on NASDAQ. This is a very nice setup right here. Very nice entry. 50-minute liquidity, 5-minute break. Then after that, 1-minute break, which actually to the downside. All right, there we go. Finally, bro, 1.5 hours in this trade. It's finally over, bro. It's finally over. So yeah, man, crazy trade. Almost, yeah, $4.7 thousand. But how did I do this? Very simple and straightforward. So pretty much when the session opened at 9:30 a.m. Eastern Standard Time, that's when I start to look for my trades. Immediately as the session opens, we took out a 50-minute high and immediate push down, which is an indication that there's a lot of volume coming to the downside. Sellers enter the markets, which is good indication that we need to sell. Here's the 5-minute break. As you can see, this is the low. We close below that. We retrace. We create this bump up, aka creating this low. So this is a new low. Broke structure once more in the 1-minute time frame. That's my entry. So as you saw, 4.7k profit live in the markets. But if you didn't understand much, don't worry, because now I'm going to show you the entire strategy step by step. In this video, I'm going to show you the entire strategy. I'm going to explain about highs and lows, 5-minute closures, more confluences obviously. I'm going to show you exactly where you should place your entries, stops, and targets. And obviously, I'm going to show you examples more later in this video so you can actually understand how to use this strategy step by step in the live markets. So here's the 3-step game plan on exactly how you can use this strategy. It all starts with the step number 1. As you can see, this is where we're going to mark out liquidity, aka those highs and lows in the higher time frame. And I like to mark out my highs in the 50-minute time frame and up. So we can go up to 4-hour time frame or even daily time frame if you really want to get that high quality liquidity. But obviously, I'm going to explain more about it in this video on exactly what to do. And step number 2 is 5-minute time frame break of structure. So this is going to show you that market structure shift after seeing the liquidity sweep, etc. And the last step is to see that 1-minute mini closure just to make sure that the trend is still there. So this is my market reversal entry model. It's very simple, beginner friendly, but I've been using this for a good time and I've mastered it, okay? So this allows us to get very high quality setups after a liquidity sweep to get that reversal move. By the way, if you don't know what liquidity sweep, I'm gonna explain you more very soon. But pretty much there's the liquidity. You're gonna mark it out in the higher time frames, and I'm gonna show you very soon how you can do that, like I said. And once the liquidity gets swept right here, you're gonna go into the 5-minute time frame, say 5-minute closure, and then you're gonna see a 1-minute closure after that to make sure that the trend is still valid. And there's your reversal entry. But obviously you may wonder, well, what the hell is this liquidity? Well, let me show you. So liquidity, aka these highs and lows, is something that these big banks, institutions, and hedge funds need to take. They need to sweep liquidity so that they can fill their large positions. And when liquidity gets swept in the markets, there's pretty much going to be a lot of stop losses being filled and people entering the markets, volume entering the markets, and pretty much that causes the price to reverse after that. But pretty much the way you spot these highs and lows is simple. The high is being created by an up candle that is immediately followed by a down candle. It's like a 2-candle sequence. And a low is, and by the way, here's the high. It rests above here. And a low is being created by a down candle followed by an up candle. And like I said, it's a 2-candle sequence. And this is the low resting right here. And obviously, like I said, the best way to spot these highs and lows to make sure that there's a lot of liquidity resting above or below them, you're going to go into the 50-minute and above time frames, okay? So as you can see, I'm in the markets, and like I said, these highs and lows are pretty much found in every single time frame, but that's why we're gonna go into the higher time frames, such as 50-minute and up, like I just said, okay? But pretty much these highs can be found easily. Remember, it's a 2-candle sequence. What is this? This is an up candle followed by a down candle, so this is our high. And you may wonder, why am I placing the high above this down candle if it's a high? Well, because a high takes 2 candles to form, a low takes 2 candles to form, and it's a 2 candle sequence, right? So we're gonna choose the more prominent candle. And look at this. This is the high, this is the liquidity. And if we go to the right, we can see that the liquidity got swept, and immediately after that, the price reversed, because now the market movers are happy. They took out liquidity, they took out resting order right here, and now they fill their large positions and they reverse the price. And check this out. This is the trade that I just took, okay? This is the high. This is an up candle followed by a down candle. What happens? Liquidity sweep, and then the price reversed, and I took the entry right here after seeing the market structure shift that you're about to learn very soon. This is a down candle followed by an up candle. This has resting liquidity. This is a down candle followed by an up candle. So this is the more lower wick this time. So that's the low. And what happens? Swept, price reverses, goes to the upside, at least momentarily. I mean, not momentarily, it goes entirely. That's crazy. And then after that, there's the highs being created, the liquidity being created, and then the price reverses. But if we look even closer, there was also a liquidity sweep right here. Look at this. This is a high right here, swept, reversed, created new liquidity, swept, and reversed. And obviously, this is also a high right here, swept, swept this as well, reversed. Okay, simple as that. But here's the catch. Most people actually know how to spot liquidity. As you can see, this is high, has liquidity. This is low, has liquidity. But it didn't completely reverse the price immediately. Why? Well, because most people do not know how to actually see that market structure shift in the lower time frames. The market structure shift tells us, is the market actually going to reverse? So obviously now I'm going to show you exactly how you can find the market structure shift step by step. So now that we know exactly how to find liquidity in the markets, after a liquidity sweep, we're going to go into the 5-minute time frame, and we're going to find the trend that was there. Okay, so if this is the uptrend, okay, this is the uptrend. It moves in higher highs, higher lows, higher highs, higher lows, higher highs, sweep of liquidity. Then after that, we need to mark out the most recent low. So when a body, the down candle body, closes below the most recent low after sweeping liquidity in the higher time frame, that's a 5-minute break of structure to the downside. That's a pretty much short. That's pretty much telling us that there's a lot of selling pressure right now. The market has flipped, but that's not enough. So in the 1-minute time frame, we need to see that last 1-minute break of structure. This is the last step to actually confirm the entry. So let me show you exactly how we can do that. So as you can see, I'm in the 1 hour time frame. This is a down candle followed by an up candle, down candle followed by an up candle. So there's 2 lows. And what happens? This actually got swept, and then immediately we got this candle wick forming up, meaning that there's a lot of buyers entering the markets. That's also an indication, but that's not enough on it, obviously. But after that, I will go to the 5-minute time frame. After the sweeps, I'll go to the 5-minute time frame like this. So hold on, let me go to replay mode. I'm gonna go to the 5-minute time frame, swept, and pretty much what we're gonna do, we're gonna mark out the most recent high in the 5-minute time frame. Remember, these highs and lows, they appear in every single time frame in the lower time frame, so we can actually use that to follow the trend. So this is an up candle followed by a down candle. This is the most recent high. We need to see an up candle body, the fat part of the candle, close above it. There we go. That confirms that now there's a lot of buyers in the markets. There's a lot of buying pressure, and the price has flipped to the upside. Now we're bullish in the 5-minute time frame because we actually break structure to the upside. So now all we're gonna see is one more break or structure, break above the most recent high in the 1-minute time frame, because just to confirm that the trend is still going into the same direction, to confirm that entry. We finally got a 1-minute high right here. And if now the fat part of the candle, the bullish candle, closes above this high, we're going to buy the markets. There we go. So this is our entry position. I would enter right there, put the stop loss actually below this most recent down candle. Why? Because that's actually a order block right there that I use as my shield in the entry. And I'm gonna target some highs. I'm gonna target these highs right here. I'm gonna target these highs. So that would be a nice 1.7 risk-reward ratio. And I will take the trade like this. Bang. And that's actually quite perfect. Look, immediately as we take out the highs, we start to reverse the price a little bit. So that's a perfect entry. Beautiful. That's beautiful. Okay. So I want to show you this example. This is, what is this? This is an up candle followed by down candle. So this is a high. I'm going to mark it down nicely. And this is an up candle followed by down candle. This is also a high. But the difference is most people probably try to short the markets right here. But if you look closely, if you go to the 5-minute time frame, there is no 5-minute. Yeah, there is no break of structure to the downside in the 5-minute time frame. As you can see, there is no break of structure to the downside. This is a low, this is a low. These are all just sweeps. They're not actual closures below the most recent lows in the 5-minute time frame. So that's not a breakout structure. That's not a confirmation that we should sell the markets after the sweep. But then if we look closely, we actually take out new highs above here. And then we start to get this nice rejection. If we go to the 5-minute time frame after that, what we're gonna do, we're gonna mark out the most recent lows. So this is the most recent low right here. And then I want to see that closure. There we go. Fat part. This is the thing, guys. Most people get this wrong because they think that a breakout structure is when a wick closes below the most recent lows, but we actually need to see that fat part of the candle close below the most recent low. And obviously after this, we're gonna go through 1-minute time frame. We need to see that one closure again to confirm the entry. And oh, this is actually quite perfect because this actually just ends on a 1-minute closure. So I could potentially just enter right here, put the stop loss above this 1 minute, this 1-minute up candle after that, because that's pretty much the order block. If you guys didn't know, order block is a very nice way to protect your stop loss, which is the last up candle after the breakout shocks to the downside and the last down candle after the breakout shocks to the upside. Okay, quick tip. And for my take profit, I'm gonna go to the 15-minute time frame for some more liquidity. I'm gonna target, well, this kind of spoils it already, but regardless, I'm gonna go to 1 minute in the 15-minute time frame, mark out these lows. That's my take profit. This is a nice 1.6. Let's go. Let's see what happens. There we go. And that do we want to reverse? Okay, not quite, but a little bit. Okay. We actually do reverse after the sweep of liquidity. So let's go to the 5-minute time frame now. We got a closure right here. This is a 5-minute breakout shock to the upside. And let's go to the 1-minute time frame after that. There we go. We actually got a straight up entry to the upside now this time. So this was a win. Let's see, does this want to give us the entry, a win again to the upside after the immediate reaction. And I'm going to target this time. I'm going to target this high right here. 1.2, 2.5. Nice. Okay, this is taking some time. Okay, well, this time it didn't want to work, but obviously I'm going to be as transparent as possible. This worked. Then we got this reaction. This caused me to lose. I mean, it did take this high, but for me, the risk reward ratio isn't too cute. But obviously, we always got to make sure that our risk reward ratio is going to be nice and we risk accordingly, because that's how we can make more money on the times we're right and lose less on the times we're wrong. So even though I lost the second one, I would have still ended up with profit on the day if this would have been the only 2 trades that I took, because here I lost the red amount and here I made the green amount. The green amount is bigger. The green amount has to always be bigger than the red one. Okay, that's the power of risk reward ratio. But yeah, let me show you the trade that I actually took today. This is in the real live markets. Okay, 4.7k on the day. Let me remove that. Here's the PNL as well. But if you look closely, like I said, there was a when the session opened, there was immediately a 50-minute high. I like to mark out all of these, okay? These highs, this is a high that got swept. This is a high that got swept. And this one gave me the reaction to the downside. After that, I go to the 5-minute time frame. Let me show you. I went to the 5-minute time frame. As you saw in the clip, by the way, in the beginning, this is the fat part of the candle closing below the most recent low, which is this one. As you can see, down candle followed by an up candle, closure. That's a BOS, right? Then after that, I want to go to the 1-minute time frame to see that confirmation entry, that one break below the most recent low again. And this is a down candle followed by an up candle. The 5-minute breakout structure already happened. The liquidity sweep already happened. This is going to be my entry because this down candle body closes below the most recent low. And naturally, we're going to put our stop losses above the bearish order block, which is the last up candle after the breakout shocks to the downside. Here's the entry. And this trade actually took a long time. Okay, it took a very good time. And my take profit actually was a 50-minute low that we created in the trade. Where is it? Yeah, we created the low in the trade. As you can see, this is a down candle followed by an up candle. In the trade, we created that low, and that was my targets. And yeah, very good profit. Where's the PNL again? Here we go. 4.7 bandos. Beautiful. So if you enjoyed this video, make sure to like and subscribe. And if you have any questions, make sure to comment them down below. And thank you for watching. As usual, I will see you on the other side. Peace out.